Hi, good evening. Welcome to WealthMills Securities Weekly Market Wrap. We at WealthMills Securities, we wish all our investors, we wish you a very happy and a prosperous, blessed new year. Hope and we trust 2020 will be a much better new year when compared with 2019, because 2019 the rally in stock market is just accentuated and hovered around a few stocks in Sensex as well as Nifty. It's just limited to a few handful of stocks in Sensex and Nifty, a few handful of large cap stocks. But the year close, the Sensex as well as Nifty closed at a all-time high. But if you observe the broader uh, market, the other stocks in the entire universe of listed space, only few stocks are traded on a higher side and given good returns, whereas 90% of market the stocks in the market are traded at a lower range. You might be thinking why and what led this such a underperformance in the broader indices. So this week, before as we are entering into 2020, I just want to analyze and share it with you. What led this broader market to be at a low level and not participating in the rally in the market? First of all, the stocks which are there in Sensex as well as Nifty, they have a average market capitalization above 50,000 crores. These are the considered to be the large cap stocks. Even we have a stock like Reliance Industries. It's not a stock recommendation. Of course, we do have some interest in Reliance Industries. Uh, the market cap of Reliance Industries is 10,000, sorry, 10 lakhs crores. Whereas the average stock that comes under Sensex and Nifty criteria is 50,000 crores. Whereas the mid and small cap stocks have, on an average, a stock which is considered to be a mid cap stock, the market capitalization is above 5,000 crores. The small and mid cap shares, the mid cap is above 5,000 crores market cap, small cap have uh, uh, have a market capitalization of about 1,000 crores to 5,000 crores market cap can be considered as a small cap stock. Whereas there are some certain quality stocks which comes under the micro cap, which have a market capitalization of less than 1,000 crores. There are certain companies right now where the market capitalization is less than 250 to 100 crores also. But right now, the last year 2019, we witnessed a major rally in the larger cap space, and the and it is a complete polarized rally. The market capitalization and the rally is limited to just 15-16 stocks on the Sensex as well as Nifty. I just want to tell you why the rest of the market is quite silent during this 2019. As we analyze the mid and small cap universe, the historical data starting from 2014 to 2017, during this phase, there is a humongous activity and there is a quite silent also in the mid and small cap universe of stocks were concerned. In starting from 2014 to 2017 and December end, on an average, if we observe the market capitalization of most of these quality mid and small caps stocks, especially the small cap space, the market, all the small cap and micro cap stocks have become mid cap stocks. That means their market capitalization on an average they multiplied many fold. Uh, on an average, the data suggests that there is a 5x to 10x return, and there are some stock there is a phenomenal rally in these stocks. So the investors who are invested in these value stocks, which comes under the mid and small cap and micro cap size of stocks, from between 2014 to 2017, these stocks have given a phenomenal returns. Okay, the average return is 5x during this 3-4 years phase. And by the end of 2017, every all these stocks have given a humongous return. On an average, you can, if you can calculate, the index returns are working out to 7x to 8x returns. That means these stocks are hovering at a very high value zones. And the first trigger came to the picture, which the trigger that led these stocks to come down is, first thing is imposition of long-term capital gain taxes, which was introduced in 2018. Once this news has been announced in the budget, and also there is a clause by name grandfathering clause. So starting from February 2018 to April 31st March 2018, majority of these investors who are sitting on a humongous profit of 5x, 6x, or some cases 10x returns, to save tax, what they have done is they exited their majority of their positions. So there is a humongous supply in the market which led these stock prices to come down. They simply dumped into the market. So that caused the first trigger for a starting downtrend in these mid and small cap stocks. And also, SEBI has imposed additional surveillance margin measures for these stocks. So they categorized different stocks, and there was a additional surveillance measure which have given for all these stocks. Even there are some quality stocks which went to these additional surveillance measures. What happens when a stock comes to these additional surveillance measures, which is called as a ASM? You, the investor, when they are investing, they need to give 100% margin towards these stocks, and there will not be any speculative activity in these stocks, which is a good measure for to to remove the froth in the market. So the rally which was going on in the mid and small cap stocks, they taken a pause because of these measures. And by the middle of 2018, we have GST has been introduced in an economy, and also from that time onwards, we are witnessing a growth slowdown in the economy. As you all aware, these most of these mid and small cap stocks, the companies runs with a debt on their balance sheets. And once the economy taken a downtrend, there is a liquidity crisis also, which we witness in NBFC sector. So the credit availability in the economy has contracted, which have this led to some additional pressure on the on the managements to raise to raise their to raise their arrange their short-term liquidity arrangements, to arrange the working capital. It was a severe pressure on these companies, and what are be the expansion plans they were making that have taken a impact. So these mid and small cap companies, most of these companies, they work on their short term working capital. They're taking from different banks and all. You all know what's happening in the financial sector. That put additional pressure on these stocks. And also, majority of the these mid and small cap promoters, what they have done is, to meet their working capital requirement, they have kept their promoter holding as a pledge to banks, and in some ways they raised the money from the market. As there is a fall in the stock prices, there is a double whammy. Once there is a fall in the market, these bankers who taken these stocks as a pledge, they are forced to sell some extent into the market. So there is an excessive supply of the stock in the market, and the ASM measures and the economy downtrend put together, all these mid and small cap stock universe was not performed starting from middle of 2018 to full 2019. As we are moving forward to 2020, since the economy and the endeavor of the current government, they are looking for a $5 trillion economy, there will be a lot of action. And the Ministry of Finance and the Reserve Bank of India, they are taking ample measures to make the liquidity available to most of the stocks, and with the stocks which have a quality promoter background. So what we expect in 2020, there will be a good moves for the mid and small cap stocks which have a quality management and quality business profile. They are going to perform in the days to come. Hope 2020 might be the beginning for these rally in these stocks. So the money can be multiplied, or can be generated well in mid and small cap stocks. Of course, the large cap stocks do provide good stability and growth for your portfolio. We suggest every investor, depends upon their time horizon and risk profile and age, taking into different aspects of their life cycle into consideration. We suggest on an average the portfolio should be spread between mid, small as well as large cap stocks. Large cap stocks give the stability to your portfolio, whereas mid and small caps give the wealth creation theme to your portfolio. So we expect in the days to come the mid and small cap universe to perform well and create wealth to all our investors. And also, I just want to tell about the stock specific action that's going to happen in the coming week. As you all aware, we have most of our investors are holding Pyramid Enterprises shares. Pyramid Enterprises, the company which have uh, presence in pharma as well as diversified financial services sector company as an NBFC. They're planning to raise 5,400 crores from the markets as a rights issue. Currently, the stock is trading at 1520 rupees as today's closing value. For the existing investors, every investor holds 83 stocks. They have the privilege to get 11 for every 11 stock. For 83 stocks, they will get, for 11 stocks, they will get around 1300 rupees. So all our existing shareholders in Pyramid Enterprises, we request, do subscribe for this rights issue, which is available at 1300 rupees. The opening of this rights issue is January 7th and going to close on 21st Jan. By this time, you would have received uh, complete information, the process to subscribe to rights issue to all your mail ID. So please subscribe for this rights issue and participate. And we believe the company market capitalization and the value for this company is at a fair value zone. So subscribing to this rights issue is a encouraging and a positive move to all the existing investors in Pyramid Enterprises. This is all with me. I wish you once again a blessed and a prosperous 2020. I wish you all the best. Thank you. God bless you.